Hello, my name is Andrew Pang. Welcome to another edition of CMS Forex News. Today is Wednesday, August 6, 2008. The number of home loan approvals in Australia fell to a 4-year low in June, declining 3.7% from May. Banks are cutting back on lending in 2008, and consumers racked by high borrowing costs are unable to get financing that meets their terms. This week data showed housing prices fell 0.3% in the second quarter, the first decrease in nearly 3 years, as the housing market weakens. The Aussie-US dollar pair hit a 4-month low near 0.9060 in New York trading. The RBA signaled yesterday that it will move to lower rates, which continues to pressure the Aussie. In the last 10 sessions, the pair has slid all the way from the 0.98 level as commodity prices around the world eased. The Japanese leading index declined to 91.2% for June, with the government saying the economy is deteriorating as there is a high possibility that the economy has entered a recession. The weaker pace of the growth comes just as inflation, pushed up by high energy costs, is surging. The dollar-yen pair rallied 130 pips after it finally broke past resistance near the 108.30 level. The Japanese government's comments, along with further slip of oil prices, propped up the dollar, which was up against its other rivals as well. The pair broke out of a triangle formation and set an intraday high near 109.50, which is also a 7-month high. In the UK, the nationwide consumer confidence index fell by 11 points to 51 in July. That's the largest fall and the lowest level since the survey began in May 2004. Slumping housing prices, inflation, and a tightening labor market have consumers upset. A private estimate of GDP growth saw a 0.1% increase for July, lower than in June. The BRC Shop Price Index, a measure of retail prices, is up 3.2% compared to a year ago. For the month, food prices grew 1.9%, while non-food items fell by 0.8%. With consumers paying more for food, spending on other goods will surely fall. The pound fell against the dollar again overnight, sliding 100 pips off its intraday high. This week, the pair has sunk 250 pips. Tomorrow, the Bank of England will finish its deliberations about interest rates, along with the ECB. Both currencies have been slipping against the dollar as both economies are being besieged by poor economic data. German factory orders, for example, slipped 2.9% for the June period as demand slowed. Foreign orders fell 5.1% in the backdrop of a global slowdown. The euro slipped below 1.54 against the dollar in New York trading, the first time it has done so since mid-June. With the global economy slowing, demand for oil has slackened, bringing oil prices down below $118 a barrel. Just as the dollar was routed when oil prices were skyrocketing, the last 2 weeks have seen a strong dollar rally. In Canada, the IV PMI came in at 65.5. A measure above 50 shows an increase in purchases by companies. The better-than-expected result helped slow down yet another U.S. rally against the loonie, but the damage has already been done. The greenback has surged about 500 pips since testing the parity level 3 weeks ago. Prior to that, the pair has stuck to a pretty consistent range between parity and 1.03. This reflects dollar strength, combined with the decline in oil prices, which put pressure on the loonie. Tonight, New Zealand and Australia review employment numbers. Japan posts a measure of factory orders. Overnight, Germany releases data on trade and industrial production. Early tomorrow morning, the Bank of England and the European Central Bank decide on interest rates, which are both expected to hold. The U.S. will post jobless claims, pending home sales, and consumer credit. Canada reviews data on building permits. That wraps it up for the day in Forex News. Join us again tomorrow right here at cmsfx.com.